Do you know how tax rates truly work? I ask that question because I get the opportunity to meet with different entrepreneurs, and they always bring up, hey, I'm making $450,000, I'm in a 35% tax bracket, and they assume that that means for every dollar they bring in, 35% of that is going to taxes. And that's not how it works. There's two separate rates. There's your marginal tax rate, and there is your effective tax rate. So let's look at the 2026 tax brackets and we can break down exactly how this works. Your marginal tax rate is what you pay on the last dollar you've earned. Your effective tax rate is what you pay when you average out what you've paid through your marginal brackets. So to better understand your effective tax rate, you need to understand how the marginal rate works. So here's what this actually looks like. Each layer is a bucket that you fill up that number at a specific tax rate. For example, the first one, on the first $12,400 of income, it's paid at a 10% tax for a total of $1,240. As you make more money, it's going to be taxed at a higher rate. Now, how we figure out your effective rate is once we know what your total tax is per bracket and we compare that to your total income, it gives us our effective rate. So while yes, you are in the 35% bracket, your effective rate is actually 28.1%. You paid $31,231 less than what most people would think if they're looking at their tax bill, comparing it directly to being in the 35% tax bracket. Now you understand the difference between marginal and effective tax rate. Hopefully you enjoyed this. Have a great day.